Imagine this. You start with just $100 today. No experience, no financial background, no special degree, just a simple decision. And slowly, something starts to change. That $100 begins to grow into $200, then $500, then $1,000, and eventually, even more. Now ask yourself, why do some people turn small money into wealth, while most people never even start? The truth is, it's not about how much money you have, it's about how you use it. And in the next few minutes, I'm going to show you exactly how beginners can start investing with just $100. Step by step. No confusion. No complicated terms. Just simple, practical guidance. If you are watching this, you probably want one thing: to make your money grow. But most people never learn investing properly. They think it's only for rich people, or experts, or people with financial knowledge. But that is not true. Every successful investor once started as a beginner. Many of them started with less than $100. So in this video, I will break down what investing actually is, how to start with $100, where beginners should invest, and the biggest mistake to avoid: stay till the end. Because one small mistake can destroy everything. Step 1. What investing really is. Investing is simple. It means putting your money into something that grows over time. Not spending it immediately, but letting it work for you. Instead of you working for money forever, you make your money work for you. That is the foundation of wealth. Step 2. Start small. Most people wait for the perfect amount to start investing. But the truth is, there is no perfect amount. You can start with $100, $50, even $10. Because success in investing is not about the amount. It is about the habit. Investing is not a one-time action. It is a long-term discipline. Step 3. Where beginners should invest as a beginner. You don't need complicated strategies. You don't need to chase risky stocks. You don't need to predict the market. You need simplicity. That's why beginners usually start with index funds, ETFs, and diversified long-term investments. These are not bets on one company. They are investments in many companies at once. So your risk is lower, and your growth is more stable over time. Step 4. Think long-term investing is not about getting rich tomorrow. It is about building wealth over years, sometimes decades. This is where something powerful happens. Compound growth. Your money earns money, and that money earns more money. And over time, it grows faster and faster. This is how small investments become big wealth, not quickly, but consistently. Step 5. Biggest mistake. Most beginners fail because of emotions. They try to get rich quickly, follow hype, buy random stocks, and panic when the market drops, and that destroys their progress. Real investors do the opposite. They stay calm, they stay consistent, and they think long-term. Now you might be thinking, okay, but what is the first step I should take right now? Because watching is easy, but starting is what actually matters. And here's the truth. Most people never start. Not because they can't, but because they hesitate. And that hesitation costs them years. Your first $100 investment is not about profit. It is about building discipline. If you take one thing from this video, let it be this. You don't need to be rich to start investing, but you must start investing to become rich. Even if it is just $100, start today. Because the difference between people who build wealth and people who struggle is action. Now tell me honestly, will you start this year, or will you wait another year?